Welcome back to my channel. My name is Charlene Randall, and on this channel, we talk about financial news and stories. And so today we're talking about the 50-year mortgage that Trump is proposed and basically said would be and something that would be great to have for people. So it's a lot of mixed feelings going on with this 50-year mortgage, right? And I think because there's affordability crisis that everybody is dealing with, um, for some people it sounds good, but for others not so good. So let's listen to what this is saying in this video.
In an attempt to make home buying more affordable, President Trump floated this idea of a 50-year mortgage in a social media post. The purpose of a longer-term fixed-rate mortgage would be to lower the monthly payment for homeowners. The longer the term of the loan, the smaller the principal needed each month to pay it off in full. Using the latest median.
See, at first it sounds like something that would be good. A lesser price per monthly mortgage. That sounds good. But let's finish hearing the rest of the details.
Sale price of a home from September, $415,200, according to the realtors, and the current interest rate of about 6.3%, according to Mortgage News Daily. On a 30-year fixed loan with a 20% down payment, the monthly payment of just principal and interest would be $2,056. Now, if you raise the length to 50 years at the same interest rate, that payment would be $1,823, and that's a savings of $233 a month. Homeowners, however, wouldn't build equity as quickly, and that's because their principal payments would be smaller, and the amount of interest.
So a lot of people want to buy a home also for the basic need to gain equity in the home, right? You want equity in your home. But with the 50-year mortgage, it would take much longer to gain equity because your monthly mortgage price is actually going towards uh, the principal for a longer amount of time. So instead of your monthly mortgage being paid into your principal balance instead of your interest, a 50-year mortgage would take longer for that to happen. So equity would not be gained as fast as a, let's say, 30-year mortgage.
That they're paying to lenders would actually be 40% higher. Homeowners could still gain equity through home price appreciation, but home prices have been softening swiftly across the nation this year, with nowhere near the appreciation seen in the years before. Now, even realtors agree that the savings to homeowners would be minimal. Joel Berner, a senior economist at Realtor.com, said in a release, "This is not the best way to solve housing affordability. The administration would do better to reverse tariff-induced inflation, which is keeping the rates on existing mortgages high." The average age of a typical first-time buyer in 1991 was 28. By last year, it had reached 38, according to a new report from the National Association of Realtors, whose deputy chief economist called the number, quote, shocking. Then there's the question of what's the mortgage rate? The average rate on the 15-year fixed mortgage is currently 66 basis points lower than the rate on the 30-year fixed. So this would kind of imply that the rate on the 50-year fixed would be higher. It all depends on investor demand for the product, of course. I spoke with Matthew Graham at Mortgage News Daily. He told me there is not currently a secondary market for these loans, nor would a robust secondary market be cultivated anytime soon. That means that in addition to the extremely low amount of principal paid down in earlier years of the loan, the interest rates would also be quite a bit higher than 30-year loans. He calls that a double whammy for those with any hope of building home equity.
So that's exactly what I was saying, that the principal wouldn't be paid towards the mortgage, the actual balance payoff for a longer amount of time. So, I mean, in a sense, it seems that the savings that you think that you're getting, you're probably not really getting, because over time, um, and let's just say we don't know how inflation is going to be in a couple of years. So you buy your home and you're set on, well, you'll have a fixed rate, but other things, that you need, other expenses in your life probably would go up, making that basic payment, um, not seem so much of a discount in, future years.
Equity. Graham also said that for all practical purposes, the loan would be more like an interest-only loan because very few people would keep a home for 50 years. The real question, though, is can Fannie Mae and Freddie Mac actually do this? Now, analysts say it's possible, but a 50-year mortgage does not currently meet the definition of what is called a qualified mortgage, and that's under the Dodd-Frank Act. It gives investors a backup from Fannie and Freddie if that loan goes bad, as in the homeowner doesn't pay. But regulators were given the authority to change that in order to ensure mortgage affordability. That, however, though, could take a year, according to Jarrett Seaberg of TD Cowen. That's because they need congressional approval.
So that 50-year mortgage, yeah, I don't think most people intend to keep their home for 50 years. By the time you have to do, so much to the home in 50 years, you've already paid, you know, so much into it, and you're not gaining interest. That really doesn't seem right. So this is what people, would you get a 50-year loan? I mean, some people, it might seem like a deal because of the payment monthly, but you have to think about overall, what's going to happen. So let's take a look at this picture right here. It has a 30-year mortgage, which is 360 months, versus the 50-year mortgage, which is 600 months, right? So the monthly principal and interest payment would be 2,686 on a 30-year loan, versus a monthly principal and interest payment on a 50-year loan would be $2,395. So it's about $300 less. But look at the interest in this, the total interest paid. So over the whole life of the loan, it would be $542,064.08 for the 30-year mortgage. Now, the total interest paid on a 50-year mortgage would be $1,012,478.06. Wow, that's like double the amount in interest. And then the total loan would cost $967,064.08 on a 30-year mortgage, for the loan amount of $425 we're talking about. And the total amount of the loan would cost $1,437,478.06 on the 50-year mortgage. So even though you're paying, and let's just say, even though you're paying less per month, this is your total loan amount over the life of the loan. And this does not include your taxes, home insurance, PMI, or your HOA fees. So, this is definitely not seeming like such a good option, because I mean, yeah, you get to have a payment of less per month, let's say less per month, but $1 million basically in interest fees. And keep in mind, you're paying $1 million in interest, and the loan amount is only 425,000. So you're paying more in interest than the life of the loan, than the whole entire loan amount that you were approved for. You were approved for 425,000, but you're paying $1 million. Um, you're going to pay $1 million in interest for the 50-year mortgage, and it just seems outrageous. Now we know we have an affordability issue right now, and things. He's floating this particular idea around for people who want to purchase a home, but I would think that you would do a little more research into this, because from what I'm seeing, basically at this point it doesn't seem like it really makes any sense. You're going to pay $1 million for a $425,000 loan that you were approved for. So in interest, and that's all interest, and like you know basically it does seem like a interest loan. It seems like an interest loan. So yeah, this what this 50-year mortgage is about. So, that's a long time as well. And most people probably, if they were going to leave it, let's say in a family, or leave it to a child, or leave it to another family member, then depending on all of those uh, details, it may make some sense. But overall, just looking at the whole $1 million in interest for the $425,000 loan, and then that doesn't include the other fees. Wow, that seems, a little overboard to get into, rather than to just do, even the 30-year mortgage. You're gonna save um a half a, about $500,000 in it. You're gonna save more than that amount. But yeah, that's a lot. So I don't think that that's really a good idea for, in my opinion. For some person, it may be something that you're looking into. It may be something that you would consider, but I would hope that you are considering more than just that the $300 per month, or the monthly mortgage. You would actually be considering, the whole overall payments that are necessary, in everything else that's included in upkeep of the property, in the home, because it's not going to be nothing that you have to do besides these payments. So it doesn't even include the PMI, and taxes or anything. This is just the loan. So tell me what you think about this, and tell me what you would do if you would consider the 50-year mortgage, or would you, stick with the 30-year? What would you do if you want to purchase a home now? Would you consider this, or do you know someone considering it? Join the conversation. Let me know what you think about this. Like, comment, and share this, with somebody who may want to know more information. And make sure you subscribe to this channel for more, and I will see you in the next video.